All right, well, hello again, everyone, and welcome out to a quick preview for the FOMC Rate Statement that's due tomorrow. So what we'll be doing in this class is we'll be talking about the upcoming event and what we can expect and how we can prepare ourselves for this upcoming event, because this is an important event as we've seen dollar rallying, markets crashing. This week has been a very eventful week, and we haven't even hit the news announcement yet. So we are getting to the point where the expectations are building high for the rate statement tomorrow. So as a trader, we need to be prepared and look at both case scenarios. Look at the what if it goes the way it's expected, and what if it goes the other way. So as a trader, we have to be prepared for either case scenario. So let's talk about it. Let's take a look at the expectation. We'll take a look at velocity scores, and then we'll talk about strategies and what pairs individually that we really like for this event. So let's talk about probabilities first. So a lot has changed since Friday. So Friday we had the US CPI figures, and again that came out very strong, running almost 40 years high. 41 years high. I think this is a big trouble for the Fed and for the economy, and this is where now the expectation for a 75 basis rate hike has increased to almost down 95%. So this is where the expectation is already there. We already are running into the event. So the markets are already pricing in or readjusting to that possible outcome. So this is where tomorrow will make a bit of an interesting price action, because if they do come with the 75 basis points, we could see a bit of a back and forth price action, but we might not get a follow through until the FOMC rate decision or the rate statement that comes out, and the Fed Chair Powell will start to speak at the press conference. But this is where it seems like a lot of that price action is getting priced in, but we have to also look at other possible case scenarios. What if it's not the 75 basis point? What if it's just only 50 basis point? Again, that could happen. We could also see a 1% rate hike. Again, at this point, you just have to kind of look at all cases scenario and be prepared for that, because the inflation is really an issue that everybody's tackling. So let's do a quick currency basket analysis and take a look at do a quick velocity scores first to just see where the strength and weakness is. So the dollar, again, remains pretty strong, as we have seen in the past 3 days. The dollar has almost broken out to new highs. So we have to take a look at dollar, but at this point, the dollar is rising. We have seen euro today. It was a bit of a velocity score on the same level as the dollar. Now on the weaker side, we have pound and we have the Aussie. So we have to now take a look at some of these crosses like the Aussie dollar, even the Kiwi dollar. There are some other currencies that's kind of right in the middle. The yen. Yen has been a bit of a sticky currency to trade. We've seen yesterday it did rise when the markets were selling off, but then that has kind of backed off for a little bit. And taking a look at the Swiss franc hasn't really moved as much towards the percentage change. Again, we're seeing some intraday movements, but overall trend-wise, or even a velocity, it's not really taking us anywhere. The CAD still remains strong at a +1, so really CAD's not the one that's really flying off right now, but it's not the one that's actually weakening comparing to the Kiwi and the Aussie. They have given up the grounds considerably, so the CAD's still staying steady over there. So and all the cryptocurrencies are still in this negative camp here. It wasn't a big down day today, but overall it's yesterday was down 11%. So at this point, the price action is pretty weak there. So this is where we are in terms of energy when it comes to going into this news event. Of course, you can consider the trend scores and see where the trend is. Like the CAD trend is still pretty strong and it's holding at a +1. But outside of that, some of the trends are actually kind of weakening here. So let's actually jump into our trading view and actually do a quick currency basket analysis to see where we stand. So let's start with the dollar. You can see that the dollar actually has now broken out above this previous high that was set on May 12th. Again, we'll talk about the price action that we saw in the previous meeting, and that was May 4th. And you can see there was a big drop followed by a big rise, and then we actually rose to new highs in the mid-month. But now we are already getting the price action ahead of it. So the dollar remains pretty strong on a monthly basis. As you can see, the basket is breaking out on a weekly chart. I mean, at this point, you can say that the price action looks a bit extended, but at this point, when we have broken out, any sort of small pullbacks can easily be bought out. So we are above all these levels, and once there's not a whole lot of resistance in sight, this is where currencies tend to run more longer than you can anticipate. So we have to take a look at dollar there. But outside of that, let's take a look at yen. So yen had a nice little bear rally, 3 days, and then it did pause over here. Does it mean that it's ready to kind of roll over here? Again, at this point, what we need to do is we need to take a look at this previous low over here to kind of make a determination. Do we break this previous low candle? And if it does it accelerate that downward pressure again? Again, this is just nothing but a bear rally, so that's what we expect in a continuation pattern as the yen start to weaken a little bit. But at this point, we have a whole lot of moving forces in the markets, like the S&P. The market's been actually pretty weak, which again is going to keep the yen. I mean, just like yesterday, ultimately, when there's a big risk-off sentiment, that will actually help the yen a little bit during the day. So that's exactly, if you go on a shorter-term chart, we'll notice that there was a time during the overnight, we actually saw the yen was doing very well, and it actually gave us some gains towards the second half of the day. So let's talk about other currencies that we need to pay attention to. Again, Swiss franc is the one that I'm not really a big fan of at this point. I mean, this thing has been holding steady. Look at the 4-hour chart, not really going anywhere. So let's not spend too much time on it. We have seen a bit of a jump in the euro, and I think euro kind of looks interesting. It was almost looking pretty weak and wanted to break, and it's now back at the resistance. So let's say if the dollar is weak tomorrow for some reason, then I think euro could be the one that could actually catch a bid off of that. So something that we'll be paying attention to. So outside of that, I think where we need to pay attention to is the growth currencies, and growth currencies like the Aussie. That's what's been taking the hit. But overall, it's not really as weak as if you see the price action. We have seen a slow and steady decline, but on a 4-hour chart, you can see every rally has been sold. So it's all about momentum. I mean, once you have the positive momentum, you see like there's not a whole lot of pullbacks that happens, and even there's a pullback, it does rise. Now what we're getting is the opposite. Every rally that takes place, we pull back. A rally takes place, we pull back. So the Aussie dollar will be the one that we'll be paying attention to tomorrow. And let's take a look at CAD basket. And just like the expectation is now for the 75 basis rate hike from the FOMC, now there is also a rate hike of 75 basis points rising from the Bank of Canada as well. So you can see they're kind of following suit here, and that will actually keep the CAD a little bit elevated. So it's kind of mirroring the kind of following that same exact move from the FOMC. And now other currencies like Kiwi, as you can see, as the dollar stays strong, they're slowly losing its strength. Again, this chart is not as bearish. I mean, it's slowly and steadily moving in that way, but it's still holding certain levels here. So we have to be understand that, okay, what's the trade here? Is it the long the dollar, or is it really the short the Kiwi? And I think right now it's really the long the dollar is really the name of the game here. So let's talk about where the weakness was. Like, look at the pound. Pound actually broke to now new lows, and I really like the way pound is set up here. Remember, we also have the Bank of England rate statement that's due on Thursday, and this is already broken the support on a daily chart. So whenever we see this break of support on a basket, we need to kind of use this as an indicator that it actually wants to go lower. And you can see that we actually have a lot more downside risk in this one as well, comparing to, again, euro. Seems like the pound is the one that's actually getting hit a little bit. And right now, if you look at the basket, it has a lot more downside risk until it hits this level that we, from early 2020 here. So this is the level that it can easily get towards. So as the daily charts look extended, you have to really kind of zoom out, look at a higher time frame, or even go at a weekly chart to see, okay, where's the next level of support? And at this point, I think there's a lot more of a downside risk here. So let's talk about let's talk about the other possible case scenarios that we can take a look at. Remember, both case scenarios, bullish and bearish. What I really like on a bullish case scenario for dollar would be the dollar yen. As you can see, that dollar yen is now actually at the highs of the candle here. So this is the one where there's two negative forces. There's one negative force and there's one positive force, and that's where you're getting the biggest move whenever you get that the two areas that are pushing the opposite sides. And if the Fed do come up with that rate hike, I think again, the Bank of Japan and the FOMC are standing at a two opposite spectrum of this, and I think that's where we will likely to continue to see this dollar yen pair continue to rise higher. So where is the next level of resistance? That's another question that I've been getting here. And as we take a look at the chart, if we zoom out a little bit, and this is where we have to go quite a far back. I mean, the high level where we are right now was actually 2002 highs. Once we break that, you can see that the next level of resistance is at 145. So there's still quite a bit of this to run higher. The question is, could this happen tomorrow or in the next coming days? And I think if the dollar stays strong, the dollar yen probably be the best place to be. And every little pullback is being bought out. Look at the base that we have been kind of forming in this chart, and we actually now breaking out here. So it doesn't matter which time frame you look at, you'll be able to find setups. And this is a nice little high base that we've been forming here, and dollar yen continues to stay strong. So on a bullish case scenario, I do like dollar. I actually do like the dollar, the dollar yen onto the upside. Now let's talk about other pairs that are actually now hitting some key levels as well. Now, if we take a look at Aussie dollar, I mean, looks pretty bearish to me here. I look at the daily chart. So a lot of the other currency pairs are now sitting at these levels that we haven't really, that we were actually right before on this last month's lows. So we are back at those levels. Same thing with the dollar CAD. We are back at the resistance that all these lines that we have drawn over here, the highs that we had about 130.50. So there's about 100 pip over there. And we had dollar Swiss franc, which is now almost back to that resistance here. So outside of the dollar yen, you can see that the other dollar crosses are actually kind of following the suit here, and they're sitting at these levels that we were almost a month ago. So now let's talk about the price action, and let's talk about a strategy here, because every time there's a news event, I always get this question from traders. Okay, what should I do? How should I trade this? And I always say there's three ways of trading this news event. You enter before, you enter on the news, or you enter on a second stage. So you entering it before, this is where if you have a strong bias, like I have traders that are saying, well, I think this will the strong dollar, the Fed hike, and this is probably priced in, so we probably see a selling on the news. Again, that could happen, but if that's your bias, and that's where you have to take a look at risk to reward and enter on that. And other times where you want to enter on the news because we just have no idea which way it's going to go, and instead of trying to pick a side here, you kind of go in and say, well, I'll pick a side after I see the price action. And then second stage is where you see the initial price action, and then you look for that basing or a pullback to kind of buy into. So all strategies are fine. It's just a matter of doing the right thing at the right time and using the right strategy that fits your style of trading. You have to be consistent with your decision making. And every strategy will come with its pros and cons. There's a slippage if you're entering it on right on the news. There could be a slippage there, so you have to be really careful about that. If you are trading with entering it beforehand, again, you could easily see a whipsaw where your stops are getting triggered, and you get this big candlestick with highs and lows, and that's again a bit of a difficult trade. And I think we probably could get this kind of price action tomorrow, where we get this little bit of a whipsaw, because price action is pretty strong. But we could also see a bit of a selling on the news, where we could see initial run up, and then we actually pull back. Again, this is a possible case scenarios that we can find. So this is where, as a trader, you just have to look at the setups and see, okay, which one actually fits your sort of side of trading here. So it's pretty easy to right now, if you take a look at all these dollar crosses, I think it's pretty easy to just to have a call that if the dollar stays strong and you think that all the other currencies will actually break out, there's a lot of currency pairs that are ready to break out, like dollar Swiss franc. We just looked at dollar CAD. We looked at Aussie dollar. So there's a lot of these currencies that are right at the support level. So we don't want to enter until the support is actually gone. I personally don't like price action like this, where I feel like the big moves already happened. But as a trader, you always have to take a look at risk to reward. So I don't want to get short until we get this break of that support. Now, actually, let's go have some fun here and take a look at the price action that we actually got in the previous meetings. So the last meeting we had, that was May 4th. So let's see what the price action was on May 4th. You can see that right on the price action was pretty strong. Dollar was actually doing really well. So this is actually no different than what we are getting right now. This is the price action in May 4th. And as soon as the May 4th price, the rate hike came out, we got a nice little sell on the news. And that actually came with a lot more of a stronger bounce. So we could always get this, buy the rumor, sell the news, but then, use that as a buying opportunity. Those dips are pretty short-lived. So that's what happened back in May. Let's go back and see what happened in March. I think it was March 16 is when they actually did the rate hike. And let's go back on March 16. March 16 was a lot different because the price action was range bound, and this thing I was almost pulling back a day before. So I would say the last price action was very similar, where we got that reversal. So as we go back in, currency pairs like Aussie dollar, going back to May 4th, we'll see exact same scenario where things were pretty weak going into it. And the news came out on May 4th, and then we got a nice little big bump here. So this could easily happen. And again, if you are staying short, this just triggers your stops, gets you out of a position before falling it further to the downside. So there's always a scenario like that, and that's one of the reasons why I do like dollar yen to the upside. I think if the dollar truly is going to strengthen, the yen would be the best pairing to be. Let's go back May 4th and see what kind of price action we got here. You can see that we got a nice little, very small little candle, and we reversed pretty quickly right after that. So that was a standard price action across the board. But right now, I think we could probably see a run up to 136 overnight, running into the to the rate hike here. So it's a tough call. The price action, it looks pretty strong. So a lot of times we have to understand that the sentiment is very much one-sided. So to get a reversal, you need that big shift in that sentiment. So let's take a look at the markets here. So I think this is another thing that's kind of tied to the outlook here. The S&P 500, and as you can see, the S&P 500 actually is doing the exact same thing. Very bearish price action. So the dollar is ultimately catching a bit on that safe haven currency, because outside of the dollar, it's not a whole lot that you can really buy. The S&P is actually down, and we talk about this in yesterday's update. It's actually down about 10%, and you don't get to see this as often. So is it all priced in? I think it's fair to say that there's a lot of the negativity is already getting priced in. But where we can see some fireworks is I think there could be a two-part event tomorrow, and that's the first thing is the mystery. Are they going to raise rates by 75 basis points, or are they going to stick with 50 basis points? So that's the first one. So that's due at 2 p.m. Eastern Standard Time. right after that, it's 2:30, the press conference when Fed Chair Powell started to speak. And again, a lot of people will be very listening closely to what the Fed Chair has to say. And again, this is where any comments, any hints for further rate hikes, all of those things would really drive the markets higher or lower, and essentially drive the dollar higher or lower as well. So if the dollar does pull back, I think same thing. We could see the Aussie rise, CAD, Kiwi. Again, all of these currencies could easily rise if the dollar pull back. If the dollar stays strong, I think that's going to put some pressure on a lot of these currencies here. So not always we get this huge movement before this Fed event. We were actually going to this week. I was actually thinking we might just hover around the support before the FOMC statement, but again, we are already moved ahead of it. So you have to again look at the risk to reward. Sometimes the pattern looks good, but the reward to risk ratio is not that great. I think there could be a great risk to reward ratio if there's a reversal tomorrow, just like what we saw last month when we saw Aussie dollar did make that big reversal here. Again, the candlestick, we went from 70. Let's actually look at the percentage here. This was almost a 2.5% move. So that's a huge move that we got right after that. So I would expect something similar, but again, we don't want to put all our chips in the same basket until we really get that. Now, let's take a look at what the price action was in the markets on May 4th. So going into the history here, as you can see, the markets were actually still pretty weak. A couple of days before, we were actually starting to bottom out a little bit here, and we got a little bump up. So, not really saying that right now we have a lot more downside pressure. So what I think is that we could get this initial pushback, pull to the downside, and then maybe a reversal after. I think that's what I'll be looking for, and that's going to make it a bit challenging if you're trying to enter beforehand, because we might get that push higher before it reverses. That's the kind of price action I'm looking for. Again, looking for a short-term dip. And after that, I think we could see a resumption in that trend, just like what we saw before in the dollar. That was just a shorter-term pullback, and that quickly rose back up right after that event. And that rallied since from May 5th till May 12th. So another week that we saw a rally over there. So that's the game plan here. If you have any pairs you're looking at, let me know. Otherwise, we'll be sticking with the pairs that we just discussed here. Again, keep a close eye on dollar yen, and keep a close eye on the dollar basket along with the equity markets. Well, thanks everyone for joining. Enjoy your rest of the evening. Again, keep the powder dry, like I always say, ahead of a news event. You want to make sure that you are not really making too many trades. Let the event come and make a trade off that. Thanks everyone. We'll be meeting everyone live tomorrow, so we'll be going through the Fed announcement in the class. But this is, again, we are just preparing for it, looking at both case scenarios, so we know exactly what to look for tomorrow in the news event. Thanks everyone.